Bitcoin has now fallen more than 50% from its 2025 highs. And whenever an asset gets cut in half, one question starts dominating the conversation. Have we finally reached the bottom? We have come down to a previous level of structure, February lows. Have we held structure or have we violated structure? Held, yep. We've held structure. We've actually put in a pretty decent pattern, one of my favorite patterns, right? This is a good example too. What type of pattern is this? It can actually be a few different things. It is a 3-bar reversal. It is also an inside bar break. Now, real quick, we talk about conservative and aggressive ways to trade where you can talk about it like a single candlestick entries versus multiple candlestick entries. Here is the benefit. I'm not saying this is better or worse, but here's the benefit of waiting for that higher high, higher close. If we were to look back here and look at this candle and it's in the zone, right? It's in the zone of our lows here. Would we call this a positive or negative candle as far as someone looking to get long? That would be a positive candle. It's a pin bar doji. It's a bearish candle, but we know it's more of a bullish sign because the tail is more to the downside. So if you're very aggressive, or if you're someone that suffers from FOMO and you don't want to miss the trade, you may be suckered into taking it. Now, again, if this is within your rules, that's 100% fine. You always follow your rules. But I'm talking about the people that are like, they just want to enter the trade early for early sake, right? Although this is a bullish candle, the real or a better sign of bullish confirmation would be what? Because this proves that the bulls have held and protected this level, but it doesn't say anything about them kind of shifting over to kind of regain territory, right? So you would wait for a higher high, higher close. And as we click ahead, we get the exact opposite. So again, a good example of waiting for that confirmation can keep you out of a losing trade like this. Again, not saying one is better or worse. They just all come with pros and cons. But yeah, so now we have our higher high, higher close right there, right? So that could be a nice entry in its own right. Let's kind of go back to reality here. Get out of my replay mode. Bye. We've retraced a little bit off of that, and then we've put in a higher high, higher close above that level. So what are we doing now, right? We have broken the peak of this double bottom, just like in the previous example, confirming its direction. And now we're retracing. So this is where either a 2618 trader or just someone who trades pullbacks, right? Doesn't matter. It's the same concept, could look to get involved. If you're specifically a 2618 trader, you're looking for that 618 to be hit, right? This is technically the double bottom or the second bottom right there. So you're looking for that 618 to be hit, and you're either going to put an order to get long right here. Pop quiz. If you're looking to buy aggressively at that level, what type of order are you using? Buy limit. If that doesn't make sense, let me know. I know orders get confusing. Right? That's one way to do it. Or you can look for the zone and say, hey, if price action hits that 618 and enters my zone, then I go down to my lower time frame and look for reason for entry, higher high, high close, double bottom, whatever it may be. Or you just treat this like a normal pullback trade. Yeah, I was gonna say have a cheat sheet. So that's the opportunity here I see on Bitcoin. Now, the harder question is, and this is, we know there's 3 parts that we need to answer before we take a trade, right? E, S, T, right? Entry, stops, and targets, right? Entry is going to be predetermined. We know that. Stops are pretty easy. We know where that goes. Targets. We need to ask ourselves the question, is there room to make profit here? So the question that you need to ask is, if price is likely to go bullish, where do you think we're likely to go bullish to from this level? And this one's a little bit difficult because we have a bunch of junk in here. but then there's not too much here. And this is not a clear sailing trade by any means, right? So like we looked at Canada earlier, right? And Canada was like, that was probably the easiest target to project in the world. It's like, look, there's nothing in the way here. You've got a lot of consolidation here to break through. Again, that doesn't make it a bad trading opportunity, but just in your mind, know that this is going to be a rough one. It's like a sailor going out at sea. And if it's clear skies, you know, hey, it's going to be a pretty easy boat ride today. This should be no problem. Versus a sailor going out at sea and it's like, hey, it's not like a storm or a tornado, but it may be a little windy or a little bit rainy. I can still get to my destination, but there may be some turbulence or whatever the boat version of turbulence is. I'm not a boat person. I don't like the ocean. I am definitely terrified of the ocean. So I see some numbers you guys are shooting in. Peter says 80. So let's draw some of these lines out here from our live room projections. 80K. Euro says 72.5 right there. It would be close enough. Not gonna be exactly on it. 72.5 right there. Nick says 75. I should have done my auctioneer voice. 75, 85.5. That was it, you guys ran out. Phil says, I would use the volume profile to help pick a target given it's unclear. Real quick, if you are unfamiliar with what the volume profile tool is and how to use it, I have a great video for beginners showing you all of that stuff. So check it out when you're done this video. So let's use volume profile, right? Now, again, we want, with our volume profile, and here goes, I forgot who asked the question last week, to explain this. What section of the market am I interested in getting information on? So what section of the market do I want to gauge the interest? Do I want to just gauge the interest of this section? Phil says the leftmost swing high, this section on the, I'm going to steal this box. That'll be easier. This section right here. No, further left. Here. January. So all the way back here, right? So I forgot who asked it last week, but again, this is what's going to help us decide where we want to draw that volume profile to or from. If I draw it right here, I'm only going to get I'm not going to get the information I want. So knowing that I want to get this entire area of information, right? I'm going to draw that bad boy from this swing high to that swing low. And you can see, as we expected, there's a lot of junk in the way. So unfortunately, the volume profile isn't going to help us out a lot, even though we kind of already knew that we were going to see this mess. So we have different, sorry, I missed some of the questions that came through. Let me go back and read those first. Alex says, I would shoot for the zone before 73K. I think that's right in here. Because the most recent movement of that bearish move broke right through that consolidation zone, right? So again, drawing our ebbs and flows on the chart, we did this, a little bit of that, a little bit of this, a little bit of that. We can get with this, or you can get with that. And then this was the straight move down. So this was the last consolidative zone before that. We should have a 618 Fibonacci retracement there as well, Ali, if my eyes are not wrong. My eyes are never wrong when it comes to fibs because I've had them mechanically replaced. Don't doubt me. Right? We can talk about how we can handle this. I like this zone. So maybe it's one of those situations where you take both a conservative and an aggressive approach, right? Or you trail, right? Generally, the most conservative approach in the 2618 or any type of pullback trade is going to be where? And we'll go down to a lower time frame to kind of get an idea on this. Where's the most conservative place in general in like a trend continuation trade? What would you say? Retest of the previous structure high, right? Price comes down, we go up, we go down, we go up, we go down, right? Our most recent level of structure is going to be our previous level high, right? Structure high. So this would be the first place that you can look to shoot for, and the second place can be there. So if you're someone that's trading multiple targets, this can be your TGT1, this can be your TGT2. Or if you're only shooting for this level, this can be your break-even point, right? So if your stops are going to be below here somewhere or anywhere they're going to be, as you spoke about earlier with patterns, if price action gets to this level, then that's the level where maybe you trail your stops a little bit and just kind of manage your risk on the back end. So you understand that, hey, price may not rally all the way up towards that higher zone, but at least I'm protecting some of my open risk after it's hit the first level that I expect it to go to. Real quick, I think a 1618 Fibonacci extension is going to be up here as well. I think we're going to be a little bit short. It's been bugging me. Yeah, a little bit short of that level as well, right at 171. So maybe even you make that small adjustment from here down to that 1618 if you're a fib person. So yeah, so it's a tradable trade. Now you got to figure out the next part, right? We got targets. Again, stops are going to be, you know what stops are already. They don't really change. Now the question is, I think it was Ryan who asked this question. What can you use, or what is your reason for entry? What do you need to happen in order for you to enter this trade? Do I need a higher high, higher close? Do I need a double bottom? Do I need this? Do I need that? Am I indicator based? And I don't know what Ryan's rules are, but that's the next question. You measure out your risk profile. If your risk profile gives you the magic number, then you're good to go. Ryan says aggressive limit on the 618. Okay. And I'm assuming stops below the double bottom. Would that be correct? All right. So let's measure out kind of Ryan's risk profile. So in entering that way, this level 1 cannot be a target level. There's just no way that can possibly happen. Just risk reward wise. So let's just kind of measure this out real quickly and briefly. We won't get too detailed into it, but Ryan would look at his profile and say, hey, I'm looking for here to here. If the 1.53 meets his rules for minimum risk, then Ryan's good to go. Orders go on. If it doesn't, then it's either a no trade or you got to make whatever adjustments you're allowed to make. And then who's it? Devin, we're talking about a trailing stop method earlier. One of the trailing stop methods could be at structure. So again, if price action goes here, what does that create? New structure high. Yep. Which means this is our most recent outside return. We know that if a trend is going to be intact, should this level be violated? Nope. So now you can roll that stop up below that level, wherever it would be. Might even be break even, probably close to. So now you're in a position where you still have some risk on the board, but you're probably feeling a lot better about yourself. And that's active trade management. So that's protecting yourself on the back end. Now, if you do it too aggressively, right? Because this was the other part of the conversation we had earlier. If you do it too aggressively and you're trailing, candle by candle, right? And let's say you're trailing as it goes up, as it goes up, as it goes up. Well, the downside of that is, well, if we get a little bit of retracement, which we would fully expect to happen, right? We would fully expect this to happen. I mean, I think it'd be naive of us to think that price is going to go straight up. So if we get a little bit of a retracement and then the price goes up like that, guess what? You're stopped out of the trade because you trailed too close. So you're angry, you're cursing, and I'm sure there's a crying face here as well. Man, right? So with trail stops, again, that's we had an earlier conversation, if you guys weren't here, about the kind of the disadvantages of trailing stops. One of them is if you trail it too tightly, then you run the risk of not giving the market enough breathing room to fulfill your prophecy. So you got to find that mix. Cool. Good stuff. Look at that. Bitcoin, I will see you in another 6 months, right? So I want to pop in real quick and give you an update on Bitcoin on my main microphone, obviously, as I'm sounding a little bit better. But we've had an interesting situation unfold, and it goes back to that lesson we talked about of the pros and cons of either doing aggressive entries or more conservative entries. Now, if you remember, our trader was looking for an aggressive order right here at the 618. And you may look at this and say, hey, Bitcoin dove right past that mark. This is a bad trade. Well, remember, it's not, right? When we are looking at trading opportunities specifically with our entries, we're not just looking for the market to be right at that exact period. We're looking for the market to be right in a zone between the area in where we're looking to enter and the zone in which our stop loss is at, or at least the zone that tells us that the trade is invalid. So although price action didn't reverse right at the top of this zone, there's no need to fear, there's no need to panic. As long as we stay within this box, it's still a valid trade. On the other hand, for someone that is looking for a more conservative entry, well, you're still waiting for that reason. Price action is now in that zone. So now you're saying, okay, well, if I get A, B, or C in that zone, then I'm looking to get involved in the trade. And you may be able to get involved with a little bit of a better price. Now, just from an analysis perspective, and this is where I really want to come in, right? I wanted to show you a trick that I used to do in situations like this. And it's also a follow-up on something we spoke about in the live room yesterday. If you guys remember, if you guys ever in there, we had a conversation about the Fibonacci inversion tool or inversion technique and when to use it. And this is a perfect example. You can see that price action came from a swing low to a swing high right here. We had a little retracement and then we put in a new structure high right there. After that, we dove pretty much straight down and we're asking ourselves the question, okay, well, how can I measure out where inside this area is price likely to go to? Well, one tool we can use is the Fibonacci retracement, which we already have on swing low to swing high right here. Another tool that we like to team with that when we're looking to project where the market is likely to extend to is the Fibonacci extension. Unfortunately, because I don't really have any pullbacks or anything, I can't really anchor it to anywhere. So this is where I would take that Fibonacci extension tool and invert it from my most recent swing high to my previous swing low, right to left and up to down, and then look for that 618. I guess you can look for 127 as well. I specifically look for the 1618 level as to be a very important level for me. So you can add in a little bit of more. There we go. Words. I'm hungry, guys. I'm missing lunch because of this. But a little more confluence for this trading opportunity. Now, to answer the question from the beginning, has Bitcoin reached its floor? The answer is, I don't know. We are definitely at a very good previous level of structure support. If we look back here on the weekly, we have our most recent level of support right here from earlier in the year. We have a previous structure high right there, and we have previous highs from back in 2021 there as well. So this could be a level where Bitcoin finds support. However, we won't know for sure until we start violating previous levels of structure. And this goes back to how to read a price chart 101. If I just take a look at the recent decline here on our chart, we have a swing high to swing low, a little outside return right here, a new structure low, and then an outside return right here. In order to get any positive type of information that this may turn back into a bullish trend, we're going to need to ultimately take out these highs and then take out these highs. And then obviously if we take out these highs, we're going to have new structure highs. But at least this first level right here and the second level right here need to be taken out in order to have a confirmed trend. With that being said, as traders, not investors, we don't necessarily need a confirmed trend to make money, right? If you remember this trading idea, we're only looking for a move back up to our previous level of structure, meaning if we go back down to the 4-hour time frame, we're just looking for 1, a move right here, and 2, a move back up to this level. And you can see that we can clearly remain in this bearish trend, we can clearly remain in consolidation, and we can clearly make profit while that is happening. So is Bitcoin at its bottom? I don't know. And I also don't really care. Hope you enjoyed the video. Hit that like button before you go. Subscribe. That way you don't miss the next cool video I do. And if you have any questions or comments or requests for trading videos, leave them below. Go USA, assuming this video comes out before that game happens. And until next time, plan your trade, trade your plan. Take care.